I'm sorry I can't be with you today at the EuroFinance San Francisco conference. I was asked to give our views on the oil market in 2016, so here are our thoughts. 2015 had been a very difficult year for oil producers given the sharp fall in prices. The year ended with oil prices languishing at about $30 per barrel, and everybody is now asking, when do we see a recovery? In our view, the recovery is on its way. We are starting to see supplies drop because we have seen oil prices at around $30 or $40 for well over a year now. And as a result of that, you are seeing projects being cancelled and postponed, and that is going to be the key driver of oil prices going forward. But of course, a big concern in everybody's mind today is how the global economy is going to start influencing prices, given we are already very oversupplied. The issue over here really is that China in particular is causing a lot of worries because the Chinese economy is slowing down quite sharply, and at the same time, the US economy is also starting to show some signs of strain. However, in our view, while the Chinese economy is slowing, it is far from collapsing. The reasons why you've seen the Chinese stock market fall are more due to policy missteps rather than a fundamental change in the economy. The government and the policymakers are very aware of the issues, particularly of rising debt, and they are trying to do everything in order to tackle that. Yes, China is going to be a lot slower, which means oil demand growth is going to be a lot slower, but it does not mean that there is going to be a hard landing in China. We are expecting about a 2 to 3% growth in Chinese oil demand. That was the case last year and the year before as well. In fact, we have seen India overtake China as the biggest consumer of oil last year in terms of oil growth, and that's a trend we expect to see continuing this year as well. In terms of the US economy, while the economy is slowing, again, given where current prices are, we are expecting continued strong driving. We are seeing vehicle miles traveled go up very sharply, and Americans just generally are driving a lot more today than they have in the past few years. As a result of that, we expect gasoline demand to continue rising quite sharply in the US, and we still expect overall global oil demand growth to average about 1 million barrels per day. Yes, that's a slowdown from last year's 1.6 million barrels per day of growth, but it is far from the really negative scenario that a lot of people are painting, expecting demand growth to be flat or even slightly down. If anything, data so far in the year are surprising to the upside. The growth in demand has been even more than the 1 million barrels per day that we were expecting, especially given how warm the winter has been. That is fairly impressive. So really, this year is going to be the main year to watch out for in terms of when the oil market balances start to turn. As mentioned earlier, it is going to be supplies that leads rather than demand. We've identified 6 to 6.5 million barrels per day of projects that have either been postponed or cancelled. That is going to start biting into the supply side and the balances. We are seeing non-OPEC supply decline in December and in January. This is the first time this has happened since 2011. And as a result of this, once the inventory that has built up over the course of the last 2 years is run down, we expect to see a sharp acceleration in prices, potentially around 2017, 2018, because you are creating a big supply gap. Another big question today is Iran. Now that the sanctions have been lifted, we don't expect Iran to actually come back to the market with significant volumes. We expect Iranian production to go up by 250 to 400,000 barrels per day. There are plenty of problems for Iran, whether it be the inability of European banks to deal with non-dollar transactions, or in general, still kind of cautiousness around the world to go and invest in Iran, given the terms and conditions haven't really been set as yet by the government. While Iran is going to grow in the future, it's not going to be an overnight phenomena. As a result, again, we think Iraq is going to be the one to watch out for. The government is really close to going bankrupt, much like what's happening in Angola, Nigeria, Venezuela, and Libya. And that's where you're going to see the big production declines, which will offset what Iran is going to bring to the market. So overall, we expect crude market balances to continue to tighten despite the world economic growth outlook not looking particularly strong, because we are seeing supply start to fall. We are expecting overall stock draws to begin in Q4 of this year, the very last quarter, and the stock draws will continue through next year and into 2018. While prices are likely to hover around $40 to $50 for this year, we expect a sharp rise in prices towards $70 and $80 in the coming years due to the supply shortfall that I just discussed. Thank you.